Hello, everyone, and welcome back to Weekly Harvest Review, a new episode at our podcast Intergarden. Me, Dumitru and my co-host Igor. Igor, how are you?
Hello, I'm good. And it's almost the last week of the July, and we have some great news circulating in European Union and United Kingdom. And today we're going maybe to put the topic of the harvest as European wants to have control over the funds movement. Overall regulation is strong arming what is happening on the market. And the first news, that's something that we discussed before, that ECB selects 36 companies for the digital euro pilot, and Central Bank selected service providers participate in digital euro pilot, and it includes major banks as Deutsche Bank, UniCredit, alongside digital bank including Revolut. So we will see this pilot be running its second half in 2026, and currently a full targeted launch is going to be in 2029.
What's important here is the fact that digital euro is not the only thing that's happening in Europe, and a lot of our initiatives for making Europe more sovereign and in payments are happening. Digital euro initiative, I know a lot of people who are looking at this with quite a big skepticism, but I'm sure that this skepticism is just the way to find a good solutions and find alternatives in case if we will have some issues here. But my main focus, finally, we will have a clean, understandable implementation of digital euro in day-to-day life. And what's the most important thing, after 2029, we'll see a lot of campaigns. Information will be disseminated to people, and we will start to understand, simple people will start to understand how to use digital euro here. The fact that European Central Bank is adding more players and more companies to this proves the fact that it starts to be less bank-to-bank. It's starting to add more PSPs, electronic money institutions, which basically it's the same in European tradition to add a lot of companies, a lot of stakeholders into one single big project, so everybody will be aligned. We know that we in Europe, we quite gathering not so fast the information and what we need to do and roadmaps, but at the end when we deliver something, most of the times we deliver something very well and very good and well established. I would like to see how in 2029, 2030 we will start to use digital euro at large scale. And speaking about the initiatives, European Payments Initiative, also ambitious and interesting project that is happening here in the European continent, is taking place. Viva.com has joined the European Payments Initiatives and added Wero to its payment and banking platform. So Wero and Viva.com is not a bank, something different. And again, as I mentioned previously, proves the fact that structures, institutions, try to gather here in these projects, payments projects, a lot of companies that are not part of banking industry, but part of fintech and finance industry. Why this is very important is because Wero is gradually moving from beyond only bank to bank. They want to build products, they want to build infrastructures that will answer and respond to initiatives of different customers from different markets, European markets. And this is good because they are coming with a fresh perspective, how the infrastructure has to work, how the customer journey and path has to be applied here.
I think it's a good example when the product side is really important during the implementation, because the cards, they implemented the way that there is a possibility to dispute, to do the chargebacks and different functionality, which is usually not the part of the banking rails. And Wero, I think, is a strong candidate to match the product experience that we used to have with the card, and it will be enhanced for the merchant activities across e-commerce in European Union. So I'm really glad that it's bringing Viva.com on the board, and I think Wero is something that everyone will use in a couple of years in their everyday life. But let's switch back to United Kingdom, and I think that's really important update that we see that UK buy now pay later regulation officially takes effect. So starting from July 15, deferred payments buy now pay later products in UK entered the Financial Conduct Authority's regulation perimeter, which means that it's getting much closer to conventional consumer lending, and providers will need a stronger affordability checks, clear disclosures, better complaints handling, and more mature credit risk operations. That may increase the cost, but also improve the consumer confidence and remove weaker providers from the market. So are we facing the consolidation phase? Because if the rules are well defined and it gives similar sometimes experience for the customers, we will see consolidation, or how do you feel about the buy now pay later market in the United Kingdom?
At the same time, United Kingdom is providing other initiatives, and for example, they want to, shake the big tree of apples. In this case, specifically, Apple company, where they want to request from Apple to be less restrictive on their NFC technology. Basically, they would like, if to quote specifically, the United Kingdom Competition and Markets Authorities consider measures that could require Apple to provide greater access to NFC technology used for contactless payments on iPhones and Apple terminals. It means that basically, if this will happen, different banks, different EMIs, PSPs, wherever, companies that can provide wallets, can provide infrastructure for Apple, they will have a new market, a new niche where they can develop. They can develop based on Apple technology, based on Apple infrastructure, but develop new wallets that will be integrated to Apple wallets and not only, and basically to open a new market, a huge new market, by the way, for payment infrastructure. And again, less dependencies on American companies and American infrastructure. It sounds quite nice.
I have doubts about that because having experience rolling out and being certified by Mastercard and Visa, it still requires the approval from American companies. So it seems that the regulator is strong arming Apple, but in the end of the day, the network is still giving you the consent to utilize or not utilize the acquiring on their even the devices. So you're basically changing the hardware to the specific iPhone, which is good. It's more compatible, it's more easier to support, but it's still not really open because you have the network which is giving the final sign off, and you cannot just roll over the payment collection just by having iPhone. You need to have the acquirer product, or if you would like to become own acquirer, you need to still be certified by the network.
Let's see, maybe this is just a step between two evils. Instead of working with Mastercard and Visa and still require some authorizations and compliance side from their part, maybe just using Apple, and by the way, Apple tokenization is a very interesting technology. And as far as I know, Apple using Apple terminals or Apple Pay, the conversion rate is higher than on the classical cards. So maybe it's just, between two evils, or maybe even simpler. United Kingdom just want to open some new markets or some new niches for fintech markets, and as usually invite the best talents from Europe to join the fintech community and develop new products there. Who knows? Maybe things are more simple than we even think. Thank you very much for listening us and watching us. We are very happy that you are subscribing to our channel. If you're watching this video and you didn't subscribe, just press the button and subscribe. We are very happy for any kind of comments we are receiving from you, and we all the time responding to them. We come in with feedback. Here is Dumitru and Igor Tomic, and we are all the time happy to be together with you and help to build your business. In the worst case, to provide you information that will help you to build a good, strong business.